Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. I am your host, Zenith. Happy Monday to everybody out there. I hope you're having an excellent start to your week. I know that we are having a pretty good time over here, especially considering Bitcoin's at an all-time high. So we'll be talking a little bit of that tonight, but not going to bury the lead on this one. Yes, we are talking about the government shutdown, what that means for everything going on in crypto, and if it has any correlation. And if it does, what correlation is that to the markets? Outside of that, I am joined by an excellent cast of crew here tonight. I got on my stage left, Tracker Dace. How you doing, buddy?
I'm good, my friend. I'm good. Like you said, very eventful week for crypto, and happy to be here with you.
Excellent. Love it. And then on my other side, we have Tracker. How you doing, my man?
Doing well, man. Doing well. Ready to kick this off. Yes, it's been a very exciting time. Like we're at this weirdly interesting pivotal point. Are we going to continue to go up, or is this the rollover and everyone's waiting to see how we transpire? I think everybody knows at this point where we stand. So, yep, looking to get into it.
Very true. And by the way, we did happen to go live in extra time on YouTube last week. That was Thursday. Tracker and myself had a special episode where we were talking about why you should take profits, and we actually broke down the math on it. So here's your TLDR. If you want to buy and hold Bitcoin forever and never sell it, you'll probably do pretty good. There will be points, though, where the portfolio is a little painful to hold if you are checking it every week. If you are looking to try even a conservative strategy of buying low and selling high to time the market, which we believe there is a sufficient amount of data that should allow you to do as such, you're going to do probably about 3 times as better each cycle than the aforementioned Michael Saylor strategy there. So check that one out. And we also break down the market psychology chart, and we show that, yes, it is still very possible to fall into that trap. And we illustrated how many people did that even back in 2021 when everyone thought things were going gangbusters. Even then, the market psychology chart remains undefeated. So please do yourself a favor, go check it out. I will admit, I ran the numbers, I did the math, so I got a little heavy on the calculations a little bit, but the overall TLDR, I believe, worked out pretty nicely. So we hope that you all enjoy that. But tonight, let's get into it. Our first article of the evening, coming to us from Cointelegraph. We are entering now week 2 of the government shutdown. That's right. We have been shut down for over a week at this point, and we're trying to figure out what exactly is going on. But there are 2 agencies in particular that are especially affected by the government shutdown, and that's none other than the SEC and the CFTC. So let's get into it real quick. Many U.S. federal employees have been furloughed, and others continue to work without pay since lawmakers failed to pass a stopgap measure to fund the government last week, and the shutdown is expected to continue. As of Monday morning, there have been no reported deal between the Republican and Democratic members of Congress to stop the shutdown and return operations to normal. And this includes activities at regulating agencies such as the SEC and the CFTC. The crux of the current issue is that the Democrats are holding a position that is healthcare. Pretty much the Obamacare tax incentives are planned to expire pretty much this year. So the big fight is whether they include those or not and everything going on around it. But beyond that, what we are seeing is that there are currently some things that are held up with the SEC and the CFTC, namely ETF applications. Those are kind of the big losers of this one. So hats off to everybody that got their application through. I'm looking at the Doge and Solana ETFs that made it through. There are plenty of other companies that have Solana and Doge ETFs that we're hoping to get approved, but they're going to have to sit this one out. Beyond that, we're trying to figure out, what does this mean overall? So we have the CEO of the crypto exchange, Zonda Crypto. He said, the U.S. government can damage the crypto industry by disrupting the SEC and the CFTC, which are vital to global digital asset markets. While the immediate impact might seem contained, their reduced operational capacity still risks stalling innovation and reducing investor confidence, particularly in a region where playing catch up with crypto regulation. So, obviously, the government failed to pass a funding bill for the next year. There's talk of a continuing resolution, which would pretty much be a stopgap measure so that you can just keep the government going at last year's budget for X amount of time, usually like a month and a half-ish. Didn't even get that. So now we're back in full-on shutdown mode. The last time we had this was back in 2018. During that one, we were shut down for 34 days. And during the time, well, that one was over the border wall. Before that, we have had a few other shutdowns previously. Notably, back in 2018, we had 2 kind of shutdowns there. January from 2022, or January of 20 to the 22nd, and then later in the year from December 22nd to January 25th of 2019. Those ones were about 3 days, and then about the famous one, 35 days. And then we also had one back in 2013 for 16 days. So at a glance, gentlemen, if you had to guess, is a shutdown good, bad, or the market doesn't care at all about government shutdowns? If you had to pick one, which would you say?
Well, if we're talking about, I mean, I'm going to go ahead and say good. I mean, right now it's easy to make the good argument, right? Gold's at all-time high, S&P's at all-time high, Bitcoin's at all-time high. I mean, yeah, the people going to say it's bad are going to have a hard time. I think it's bad for a lot of things. I'm not in favor of our government being shut down, like on principle. But if you're asking if it's good or bad for the crypto market, it's hard to make the argument that it's bad.
I like it. Tracker, what would you say?
I personally want a really small federal government, so I love the idea. But at the same time, the federal government was never intended to get this big, not even close. So it's this monstrosity now. It's ridiculous how the size of the federal government. But that's kind of outside the point of what you're asking. I think it's bad if you're a federal worker because you're obviously furloughed, and that's going to impact those people. And I think there's roughly 2.3 million civilian federal workers that have been furloughed so far. So that's quite a bit. That's bad for them. Of course, the next thing will start to lead into a national park, things like that. The big one, Social Security and benefits, would start kicking in, would start being impacted. Of course, anything that's tied to retirees or military that are no longer active, that are getting that's going to be an immediate impact. I personally don't think it's going to get to that stage. That's my 2 cents. But then again, this administration has been very willing to rattle, kick the hornet's nest really hard. So I wouldn't put it past them to keep fighting on this. Let's be clear here. They're working on a lot of back end deals that none of us are going to see. We're not going to know about. We're not going to know what was promised and stuff. When I say deals, more like agreements saying, hey, I will go ahead and approve this, but I want to get these things that my lobbyist friends that put me into power, they're going to want to put in place too. So all these back end deals are going to keep going on. So the sad part is we're not going to know the details when it all comes out, but they're guaranteed there's a lot of disruption happening around these efforts right now. I think here's the thing, as far as the financial markets, the longer it takes, the more impact it will have. The more you'll see, precious metals maybe continue to rally. I still think they're kind of getting frothy, and they could start to rotate into other assets, mainly crypto specifically in other areas. But I think, the longer this thing goes out, the worse it's going to start to impact. But right now you're looking at, you said 33 days, and that wasn't that long ago. So could we go a month, 2 months? I think that would be sustainable. But the other big thing is there's economic data that's coming out. Are they going to be releasing that economic data, since the SEC and others are no longer reporting on some of those numbers because the government's been shut down? So is that going to be an opportunity maybe for third party organizations to pop up and start providing that data for people to understand what's going on? I'm sure the traditional TradFi is going to be looking for ways to how to get that information and data so they can have an idea what the heck is going on, because until they can start reporting on this stuff, it's a huge unknown. The key thing being the labor market. I mean, the labor market has obviously been the big concern, the big bugaboo right now in this entire market. So the concern is that getting a lot worse or better? But if they're not going to be reporting on the data, how are we going to know about that? So that's one big area from the financial markets concerning.
Yeah, that's what I was going to mention yesterday. From last week, is that them not reporting it is short term very bullish. Like long term, you have to assume that, like you've said, I imagine most people assume that this will not stay long enough for it to be like, okay, let's find new ways to report it. But I think skipping a report during this crucial time, during this like strong market in terms of the normal, the actual stock market, along with crypto and BTC pushing, leading the way. It certainly was a catalyst, and I think October is already a bullish month for crypto, historically speaking, one of the most, right, and if not the most. And so, yeah, it's a lot of things have lined up to cause a good cycle here, a good probably most of Q4, I would think. We'll see what happens towards the end of it, but usually things happen in 60-day cycles or something like that, right, Z?
Yeah,
That's pretty accurate.
I
So
would like that. But one thing I do want to add here is we're all assuming there's 2 more cuts coming this year. If they're not back, are they allowed to announce the cuts, or are they pretty much they're on the sideline? Are they still going to be reporting on that?
Well,
Are
look,
the
man, I
SEC
mean,
members still going to be? Are they still going to be meeting and still doing their jobs and reporting whether or not they're going to cut or not? Or honestly, I haven't
you
seen
mean
it.
the Fed members,
I haven't
not
seen
the
it. I
SEC.
haven't seen a shutdown long enough to impact that. So I really don't know how that works.
Well, remember, it's not the SEC, it's the Fed, and the Fed is
By the
outside of
Fed,
is not a government entity, right? Famously, the Fed doesn't is
It's
not
true.
under the purview of the government. So just like the other times that they've bailed the economy out, they are no respecter of a government shutdown, I would imagine.
you are correct. This is the one time or the corner case where we're happy that the Federal Reserve is an outside private entity because no, they are not affected by the government shutdown. So yeah, we should actually see a press conference from Jerome Powell at the end of October, assuming that this thing keeps carrying on that long. But to answer the question that I posed to you, fine gentlemen, you guys definitely beat it up pretty good. We already did miss one jobs report by BLS. That has already happened. So there you go. Jobs data didn't come out. Well, according to BLS, but like you guys mentioned, there is like plenty of companies out there do have their own private internal researching teams that do look into these things, and arguably they probably do it a little bit better than the federal government does. And they also look at things that they actually care about instead of just kind of the very odd, weird, cherry-picked way that they try to account for job creation or loss or whatever. But the overall answer for does a government shutdown affect markets? The answer is that it is actually negligible. What I was looking at, we looked at Bitcoin price, gold price, and the S&P 500. Overall, there's no marketable difference. Pretty much whatever existing trend is going on at the time continues to exist. So currently, we are still pushing towards all-time highs. The S&P 500 continues to make all-time highs during the government shutdown, and gold also continues to push further. Back in 2018, similar story, but slightly reversed this time. Bitcoin was coming down off of its all-time high, and it pretty much continued that correction. The great irony is that actually a few days before the government shutdown, Bitcoin market actually bottomed for the bear market that time. So it had a slight rebound, but then kind of pretty much went back down to all-time lows. Again, with the S&P 500 looking back at the older years, even back in 2013, very similar story, continuations of existing trends. And really, I think what we're seeing on this one, this is Uncle Z talking here after looking at the data, is that I think it's similar to what happens when people are expecting the Federal Reserve to make moves, which is that these things get baked in. And if anything, they don't really even move the needle that much. The one stat that you can argue is actually affected by government shutdowns is potential GDP. But even then, based on the research I was doing, the estimate for change in GDP based on government shutdowns is 0.1%. Is that a lot?
No, it's irrelevant. In the
Yeah, it's negligible.
I will say this, though. I think it's funny that we brought up the Federal Reserve. And I quote, the U.S. Federal Reserve is largely insulated from the ongoing federal government shutdowns that began October 1st due to its unique status as an independent entity funded primarily through its own operations. WTF to everybody. You know, I know we've talked about this in the past, but how does somebody with that much power that's not even a part of a government agency running the show here? Just saying, people need to wake up. Please wake up.
That's very accurate.
Nothing federal or reserved about it, my friend.
No. Yeah, there's nothing federal or reserve about it.
That is entirely accurate. But to you guys alluded to it, the question of how long is this going for? Well, good thing we have excellent things like Kalshi and Polymarket who are more than willing to create a market for people to bet on. And boy, are they betting on it. So let's see what we got. On Kalshi, a bet length of shutdown predicted a 69% chance of it lasting more than 51 days, a 41% chance of more than 25 days, and users gave it a 24% chance of a new all-time record for the government shutdown length, aka 35 days and up. So there you go. That's what people are putting their money on. And to be honest, it doesn't seem that crazy. I think that the Medicare issue or the healthcare issue, if you will, is a large enough issue for each kind of side of the party to really stake their claim on this one. And as it stands right now, the Democrats really are the ones that are not coming to the table when it comes to this stuff. So Republicans do control the House, the Senate, and the desk of the presidency. But the big ticket here is you got to get 60 votes in the Senate, and they do not have 60 votes just based on party lines alone. So you got to get some people to kind of come over to your side.
Do we know what it's at currently? Have they shared like what the recent count was on that? I'm curious. And the other
I
thing
want to say it was either like 52 or 53.
Okay, so enough just to stall things out. And those people that are holding out are the ones that are going to be making the back end deals that we're not going to know about on future votes that are coming. So that's what's happening there. Can this prolong? It could. I don't know necessarily if the healthcare is the only thing that's going to hold it up. If I had to bet, there's other reasons why people are holding this up. It's almost like a form of grandstanding to basically get your way because you haven't been listened to. So now I'm going to do this so I can get my deal on the back end and get them to agree to what I want in the future. And that's pretty much how the U.S. government operates.
Well, yeah, man. When you have the two-party system, let's imagine you're Team Blue and Team Red has all the cards. Well, you want to play as few hands as possible while they hold all the cards. That's just good game theory.
There you go. So, quick record does show that the current standings or the multiple votes that have happened in the Senate was you need 60 votes to pass. The 19th, they got 44. The 30th, they got 55. October 1st, 55. And we're going downwards, 54 and 52 as of today. So, where we stand right now, yeah, it's anyone's guess. There's going to have to be some concession made somewhere. But again, keep in mind, these are giant omnibus bills that are stupidly long and everyone gets whatever they want kind of shoved in there somewhere. And then they make the argument on TV, oh, this person's voting against the teachers, even though they're specifically like, no, I don't like the other crap that's in it. They're like, how could you vote against the teachers? And it's like, it really is kind of like this weird political rock and hard place that we've created, which is like, do you want the thing to pass? Do you want the government to go on because you don't want the negative optics of people saying I lost my job and stuff like that, and they blame you for it? So there is an incentive just to get something through. But at the same time, I think that this issue, similar to what we saw with the border wall back in 2018, these are some large issues that have really been almost platform wide when it comes to whatever party was running at the time. So whether you're a big fan of Obamacare or you're a big fan of the border wall, those were very core issues to the elections in which way they were created. So in this one, I mean, I don't see why it would be any different.
Yeah, it's one big, it's the ultimate, that's what I'm looking for. Reality show, essentially. It's the largest soap opera, and we're living in it. That's all it is. It's all theater.
We've seen these sort of big omnibus, budgets being passed with special interests carved out. It's become really rampant, ever in sort of the modern era. And to throw it back to something you said, where it's like the government is adept at observing a real need in the nation and the people that they govern, and making sure that they cover their special needs carve out while they meet that need. The Patriot Act, right? One need only look up the Patriot Act and how it works, and what it did. And like you said, it probably paid dividends to call it the Patriot Act, when in reality it's it was a pretty big breach of the trust of the people, in my opinion. I
agree. But I think we're neither here nor there on that one. That one's kind of that history has already unfolded. We've stared into the abyss, and oh my gosh, the abyss stared right back at us.
Well, not to go too far off, but what's going on in UK is pretty alarming about how many people are being arrested just because they're speaking their mind on the internet. That's crazy how many staggering numbers have been thrown in to been arrested for that. So luckily we do have the Bill of Rights here in the United States. So hopefully we can keep speaking as we so choose. But like you said, Xena. So what else we got, Xena?
Let's see. Well, we got ETFs pulling in record numbers. That's something that's happened recently. Crypto funds smash records with $5.9 billion in inflows amid the government shutdown. Well, cryptocurrency investment products recorded their record high. The ETFs recorded 5.9 inflows on the week ending on Friday. Quote, we believe this was due to a delayed response in the FOMC, aka the Fed, interest rate cut, and it compounded by very weak employment data and concerns over U.S. government stability following the shutdown. The record inflows came amid an overall bullish trend in crypto markets, which led to Bitcoin registering a new all-time high on Saturday, and a new one today as well, by the way. with inflows surpassing by 35% the previous record from mid-July of this year, which was $4.4 billion. Unlike the previous inflows, which were almost equally distributed between Bitcoin and Ethereum, the latest gains were heavily dominated by Bitcoin, with the Bitcoin funds attracting $3.6 billion themselves. So, two prongs to the story. Number one, hey, ETFs are still pulling in money. Second prong to the story, we see a little bit of a trend reversal, at least temporarily, which is that Bitcoin is now outperforming Ethereum. And you can see that. And I think largely the reason for it is, well, people stopped buying Ethereum ETFs. Granted, they are still going up, but we pretty much have not had any purchases since late September, pretty much the 27th. That was when we saw our last big inflows through the arms race that we're tracking over here on the Strategic Ethereum Reserve website. Currently, this is the only one we got right now. Bitmine coming in here pretty much today, buying up, just a casual $840 million worth. But outside of that, markets have been pretty quiet. So it's interesting to see because, yeah, Bitcoin coming over to CoinGlass, it's looking pretty strong. And the Ethereum one, there you are. Not nearly strong. In fact, it looks like it's kind of fallen off where Bitcoin is picking up. So, any conclusions to draw from that data?
I wanted to point out, DacePay posted in there today about Grayscale receiving the approval to start enabling staking on their Ethereum positions. I would suspect that that's going to also trigger potential movement in the Ethereum price and also back, more ETFs making moves on that because they're obviously going to be submitting to get their approvals as well. And the details, I put it in the members chat as far as some of the details, but essentially there's going to be an opportunity for them to, if they wish, start giving out a dividend to people who are holding the Grayscale ETF. I believe it's ETHE is the ticker on that one. So if they start paying out a dividend in that's pretty nice. You're getting a dividend on top of a holding. On the number two with crypto, is Bitcoin doing any type of staking? Oh yeah, they can't. So I'd say that's an interesting take there. I think that could definitely just change what you're seeing right now. But it could be essentially as people are flocking more to the Bitcoin currently because of the concerns, if they even are concerned about the government shutdowns. It could be a little bit of that, why Bitcoin's moving a little bit, but I looked at recently, I think Ethereum's now starting to outpace it a little bit now. Could be off the news of the ETFs allowing the stake. I know Dasa brought up the chart before about the rotation out of gold into Bitcoin specifically. So it could be also a starting of a rotation because, with gold hitting now, that's pretty close, if not already hitting that psychological level, that 4,000. And of course, silver hitting around the $50, price, you could start seeing those rotations out of some of those winners and moving, like we've talked about, into the Bitcoin, specifically rotating into Bitcoin. Could just be simply that. And then it might find its way into Ethereum. But it's going to be interesting to see how this plays out this quarter or even this month between the two on the inflows. But yeah. Dace, you want to talk more about that? Because I know you brought that up.
Who's this Dace guy? Sounds like he knows what he's talking about.
Yeah, man. Yeah, man.
You nailed it. You nailed it all. No, I was going to bring up the things you brought up. Those are a lot of the things that I'm always posting at DGen Roundtable and Walk the Block. Come check us out if you have not. Over in Telegram, and we're also on X, Instagram, all the places. I would add, if you look at the history of things, Grayscale seems to have been the test bed for approval from the SEC. They're the earliest to file, and they're the earliest to get approved. All the way back to the Bitcoin futures ETF, and then Bitcoin spot ETF, and then Ethereum futures ETF, and then the Ethereum spot ETF without staking. And now they're the first to get the staking rule. They were literally the first to every single one of those offerings. And so I think when the BlackRock one goes live, that's going to be the real serious big milestone. And yeah, I think it's very interesting, the fact that Grayscale has this sort of pole position always, but they certainly have led the greater market trends in terms of traditional finance embracing crypto assets.
Yeah, that's true. Grayscale has definitely been ahead of the game, but overall, a rotation sounds like something that could definitely be feasible, but hear me out. There is a scenario that does exist, which says that there is a non-0% chance that this could be the all-time high for the cycle. We are officially in October. This is in the target range for if you go off the old 4-year cycle model from top to top. This theoretically is in that range. I happen to think it's definitely less than a 5% possibility, but by everything that we've been building up for the last 2-3 years, this is now in the target zone and it is a new all-time high. Therefore, it does meet both criteria.
Yeah, I want to say October 5th was what is it, 1,064 days, like to the day? And like a couple of cycles, it's been within a couple of days worth, right? And so in terms of the traditional 4-year cycle, we topped out yesterday and we've hit a new one today, right?
Yeah. So look, it's possible. I personally would assign it less than 5% chance, but you got to note that if you had built a strategy back in 2022, 2023, like we did, this was one of the scenarios that you laid out, which is early October, all-time high. That's the one. So it does exist, but I do still personally happen to believe that we have a bit more gas in the tank and that the macroeconomic factors playing out, namely Federal Reserve delaying everything going on and the slacking of the job sector, that kind of stuff. Those are the factors that have the ability to actually increase the length of this cycle, moving top to top. But I'd be remiss if I didn't point it out here. So yeah, Bitcoin, it's been on an absolute tear lately. But one of the other things that's been interesting, similar to the ETFs, and it makes sense, which is that Ethereum and all the other tokens are not following Bitcoin's kind of, they sound similar, but they're not doing the same thing, which is that Ethereum, still below all-time highs currently, did have a good day today, but has not had the movement that Bitcoin did. Solana, same story. Cardano, same story. Let's get another one in here. Avalanche, same story, which is that Bitcoin appears to be kind of doing its own thing. And I think if you correlate that data between this and then also the ETF movements, it kind of makes sense. The thing to wrap your head around on this one, though, is that Bitcoin is supposed to lead the market, meaning that the rest of the market is supposed to follow. So why isn't the rest of the market following in a time where we are expecting the rest of the market to even be outperforming Bitcoin at certain points here? So you guys have an explanation? Because I'm coming up short on this.
I do. So Bitcoin is correlated to the M2 really tightly, and it's been lagging the M2 over the past month or 2 months, maybe even 3 months. Every other coin that is not Bitcoin is not correlated to the M2. It's correlated, obviously, to Bitcoin, but even more heavily to the business cycle. If you go look at the Russell 2000, if you go look at the ISM manufacturing business cycle, and compare it, like you said, the ETH chart to every other alt chart, and then also to the Russell 2000 chart. The Russell 2000 reminds me of Ethereum quite a bit. And so, yeah, I think that's my general working, like, down and dirty thesis is Bitcoin's tied to M2, but every other coin in crypto is tied to, the greater business cycle and sentiment for risk on.
There you go. Well, you did mention it, so I brought it up. And guess what, gentlemen, congratulations. We do have a new all-time high for the Russell 2000.
Let's go. It's time, dude. Been watching that for years.
Yeah. And just to be clear here, so since the bottom for Ethereum and Bitcoin, we'll say it was right around September 26th. Bitcoin is up 15%. Ethereum is up 26% on the move. So Ethereum actually is outpacing Bitcoin. It just hasn't hit an all-new time high like Bitcoin just recently did. But that was a napkin math that I just threw together. So Ethereum's outpacing it. And if you look at the ETH to BTC ratio, you can even see that's the easiest way to look at it right there. I mean, it's moved up against Bitcoin on this move up. Like I said, it just hasn't broken out to all-time highs, which is why probably Bitcoin's getting all the attention because it's an all-new time high. So that's another thing to think about. But just look at the Bitcoin to ETH ratio. Just look at ETH BTC ratio, and that'll tell you the story.
Yeah, Bitcoin is up 15%. Ethereum is up 22%.
Mm-hmm.
Yeah, and so another interesting one to look at after this is Total 3 is also breaking out from its 2021 level, which is quite the level for that chart.
But to go back to what Dace is saying, and that's the thing we're all waiting for, is the ISBN number, because the fact that is the amount of money that's being moved around and spending. And then of course, when that goes up, it makes complete sense because now all of a sudden companies have more liquidity to use to borrow at a cheaper rate because the rate cuts to move those funds around, buy more aggressive things. They have more capital, rotating out of their winners into their laggers, and this is why it's a good cocktail for the risk on assets. I know we've beaten this one up a lot, but that's all it is. That's as simple as that. Now, I have some buddies that actually work in electrical engineering across other different companies in different sectors, and they've been on fire for 3 years because the expansion of data centers, cloud servers and stuff like that. So that they've actually had the most, it's in the last 20, 30 years, they've had the most explosion of work in the last 3 years. Like they can't even find enough electrical engineers and electricians to do the jobs. It's that kind of an explosion. So there are pockets of areas that are expanding. And if you think about it, those areas that are expanding are pretty much laying the structural foundation for work to come or areas to go. So companies are planning ahead of time for some of this stuff. But yeah, the AI, the data centers and all that stuff are spinning aggressively. And I heard a crazy stat. It might have been, I think it was Sami that brought this one up actually. So I'll give kudos to him. And I looked at it and sure, it's pretty inaccurate. That is the fact that the infrastructure build out of AI is the most we've seen since he claims this the railroad industries, which is pretty a massive expansion. I would probably put it just simply under the industrial revolution. We haven't seen this kind of expansion, this growth expansion, this aggressively since that time. So it's really hard to price how well companies are doing in general because this is all uncharted territory. Nobody knows. And at the same time, I'm not saying that AI is a silver bullet. It certainly is not. You're going to see a lot of companies that are struggling, and this has already been true because you have to have your house in order to benefit from the nice new shiny tool that comes along. You know what I mean? So you have to have everything in order to benefit AI. The reason I'm tying all this together is the fact that yes, there's all this new technology, and that's going to be the narrative and these expansions. You're going to get that. I also think it's going to be a little bit of a recurrence of the whole .com bubble again, all over again. There's going to be it's basically you got this great new shiny tool. We all want to use it. We're all going to invest into it. And then we realize, oh, we're not quite ready. I think it's going to be a lot of that.
One of the other analogies I've heard for what could possibly be the bubble for AI and similar things is it's a trend that we've seen over the last 2 decades, which is that whenever we have these emerging markets, it gets really hot across the sector. And then the bubble bursting is effectively kind of the market choosing a winner. And there's a consolidation and dying out of everyone else that is not like the top 3 effectively. And the reason for that is that a lot of the things that we see largely have a user base with them. So whether it's social media, it's pretty much like there's a reason that Facebook and MySpace were the ones that popped off, and now it's pretty much just Facebook. Twitter has taken some of the share, but even after that, like who's 2 and 3 or who's number 3 and 4, it's very hard to name them. It's similar for other stuff. Like the ride shares are also a good example of this. There were probably like 5 or 6 back in the day when it was really popping off. Now it's pretty much just down to Uber and Lyft, and I would argue that Uber is still much more dominant than Lyft in the marketplace. So when it comes to AI, I think that we could definitely see something similar, which is that the market's going to kind of choose winners, and then the bubble popping, if you will, is going to be the losers dying out, whether it's dramatically or whether it's slowly. Don't know on that one, but that's kind of what I'm seeing when it comes to that. And I think that analogy makes sense.
It does. And that's exactly what, well, it does. That's the end game, how it happens. The .com bubble basically was, and you're going to see people are just throwing cash at this thing, but they're going to realize they're not getting a return on investment because they're realizing that we thought this was just you throw money at it and it just magically works. It's not the way it works. You got to still build out the infrastructure and have your house in order. This is the same reason why companies are moving to the cloud and realizing, oh crap, we're not ready. So there's a big trend, people coming off of the cloud now because they're not ready. And it's for all the same things we've laid out. And it's just, a lot of these board of directors or, the upper managements of these companies, these big companies, they go after this new shiny ball essentially. And that's what they're doing. They just chase the new thing. And just to say, hey, yeah, look guys, we're doing it too. We're cool like everybody else. In reality is you're not going to get any ROI. It's just basically, it's a big dog and pony show. Essentially, people are just chasing to try to show that they're in with the times and trending and looking good for their shareholders. Because we're looking at R&D and moving in those directions. So that's essentially what's going to happen. But also look at those companies that were successful. How many of them have government subsidies that help support them? So that's what you want to look for to see who the winners are going to be. That's typically it. Oh, Palantir is definitely going to be a winner. Yeah, that's right there. That's the big 800-pound gorilla. Some people compare it to Skynet. It's possible. I'm
They
not
do it for
saying it
good
is.
reason.
I'm not saying it is or
Skynet from
not.
Terminator, the actual company Skynet, because it's a real thing
Yes.
now too, which is
I think it's a Chinese company, isn't
Yep,
it?
that's right. That's right.
That's a bad name
Does
to
that make
call
that
it.
worse?
Yes, of
So
course.
Yeah.
I like to think of it, if you've done any study about the history of the West and the United States, the idea of the gold rush, right? Um, if Bitcoin is digital gold, all of these little towns, right, in these locations where people think they can generate some more gold for themselves have popped up, and most of those towns become what we call ghost towns, and some of them make it for other reasons because they build a community, right, and because there's a network, because there's some other draw to that city. Crypto is unique in that it is not like a stock. It's a lot closer to sort of a commodity of sorts, and so, but it's based around the network and the people that are participating, right, the sentiment of the token itself. And so the digital gold rush and like the ghost town effect, that's connected, the idea of people selling the shovels during the gold rush, right? That's your dexes, that's your people that are liquidating people and driving price in the short term, and making money off the fees. And so it's got all the very same dynamics.
Correct. And I would say I would even take it a step further, which is why you have a saturated crypto market with all these different chains. You have different types of narratives. I think you're going to see a bubble pop where you're going to have a purging of all that as well. And only the good ones are going to survive. And that's going to happen because let's face it, crypto is so saturated. It's completely saturated. So, you know, that's
I,
something you got to keep care of.
Is it though? I
I
mean,
think that
compared to
we've been
traditional finance, it's a speck. I mean, it's what, a fifth of a percent or something. I don't know that it's saturated.
I think we've been talking about this probably since 2022, 2023, though, which is that we've been anticipating that the bear market following this one is going to be brutal, and we're going to see a lot of stuff die out. And I think that's the nature of how you're going to see it play out, which is that we are going to get consolidation in certain things. There's always going to be competitors popping up trying to have like some sort of good fundamentals or good tech or the best narrative and hype and marketing or whatever. But I think the reality is that this next bear market coming up, we're going to see a lot of stuff die out.
Maybe so, man. But I think that we also just might see a flattening of things, and a diffusion, and an advent of control. Um, one of our members, shout out Mr. Angry Twinkie, over at Degen Roundtable,
Hey,
made an interesting post about a New York experiment, where they were playing with universal basic income and dispersing USDC to people with real IDs. And so I think to use that as a case in point to our conversation right now and not chase that rabbit too far, I would say, I think that it's possible that you have, we've had the SEC come out and say we want to move the whole New York Stock Exchange on chain, and so there may be a future if they are willing to use inflation and use the fiat currency to prop up the S&P 500 like they have in the future, for them to prop up crypto in the same manner, as it becomes more controlled, and as they basically move the stock market on chain and they blur the lines between the two sectors. I think that's got to be at least a possible outcome, and maybe that happens after the next big brutal bear market. All right, I mean it could be both, but something to think about.
that's true. Although at the same time, I think, shoot, you guys mentioned this during the Bretton Woods issue back in, was it 1971? People at the time, the big macro economics guys were saying, oh, wow, the dollar's going to collapse. And they were like, oh, it's going to collapse in like the next 5-10 years. And here we are in the year of our Lord 2025, and it still hasn't collapsed. So the reason I bring that up is to say that, do we move a lot faster in crypto? Yes, obviously, yes, we do. But at the same time, I think it's easy to look at everything and be like, yes, these are some outcomes that are probably going to be eventual at some point, but I don't know if we actually have accurate timelines or time horizons for that kind of stuff. Could it be next bear market? Yeah, sure. Could it be 3, 4, 5, 6 cycles away? It could also be that.
No doubt about it. And I think how far this administration is able to take and to take legislation and also impart some degree of permanence to that legislation will tell some of the tale in terms of how the next few bear markets will go, and how protected this current pro crypto environment is moving forward into an unknown future, which I would imagine it would seem the incumbent, whoever runs, which my guess is JD Vance. I could be wrong on that, but that's my early guess. The meme's too strong, but yeah,
I think it's the betting favorite currently, just beyond the meme.
Yeah,
I really do.
Well, yeah, and so I mean, he's obviously very pro crypto as well, and so I think anybody coming in from the right would be, they'd have a hard time. I think they'd have a hard time platforming an anti-crypto stance, given, let's call it what it is, the show that Trump has made of embracing it, and so yeah, it'll be curious to see into the future what the next administration has a big weigh in. I know we've covered that ad nauseum too, but it's worth bearing here.
True. Tell you what, gentlemen, I got a few more things I want to cover before we get out of here tonight. I want to turn it over to coinmarketcap.com. By the way, this is quickly becoming even more of a favorite website of mine. God bless these people. This is the site that I went to actually pull historical Bitcoin price data for. It's not advertised, but if you actually like type in the URL, like Coinbase.com or coinmarketcap.com/historical data / whatever asset you want, it will give you an Excel table of all the prices. I love them so much because ChatGPT literally just made up Bitcoin prices for me when I was trying to get that. So ChatGPT, you suck. CoinMarketCap, I love you. Anyways, that's a tangent. But let's take a look. Market cap for the overall crypto market, $4.3 trillion. We're getting up there. But Fear and Greed Index is what I wanted to point out. I don't usually use them for Fear and Greed Index. I usually use Alternative. And I wanted to point out we are currently sitting back in the 70s, deep in, not deep, but pretty good in the greed. If we flip down to our historical, I'm pretty sure we covered this recently. We were at 28 less than 3 weeks ago. And now we hit a high of 74 pretty much on the 5th of October, or Saturday, if you will, based on how the markets work. And now we're sitting right at 70. So the sentiment has quickly changed around, but also importantly, let's flip over back to CoinMarketCap. Altcoin season index. It's sitting at 63 right now. It's up there, but it's not in that altcoin season range just yet. So we're still seeing stuff. Notably, if you look at the numbers and you remember what we've seen, a lot of the stuff that was really carrying the market has actually come down a good bit for its past 90-day performance. So that's kind of what we're seeing going on there. So altcoins not outperforming right now, even though we're at new all-time highs again. And then the Fear and Greed Index, 70 is pretty good, but for a top of the market signal, I don't think it's square. I don't think it's there.
No. And then keeping this in mind, if you go back and look at the history of the Fear and Greed Index, I mean, it can stay pegged, 80, 90 for a little while on a good run up. So that's pure euphoria. And if you haven't seen it, if you look at the history, you'll see that as well and everything. So yeah, you got just because we just kind of got green doesn't mean anything. It's not like a quick indicator. It's kind of a lag. I'm not gonna say a lagging indicator, but it tends to take time to roll over and things of that nature. So I wouldn't take too much into it. The fact that it just turned 70. If you go back and look at it, you'll see it hitting 80 and 90 and holding strong for long periods of time before you see it roll over, especially back in when true parabolic moves that you'll get in time. But gentlemen, I need to leave. I do apologize for having to leave. I know you guys have got this locked down more than you guys are in good hands here. So with that being said, I got to sign off, but look forward to it again, guys. And we'll be in the members chat and whatnot with everybody and talking about that. But yeah, this week's gonna be a lot of fun. I think with the government shutdowns, it should be an interesting time because at least, hey, we don't have to hear anything from them. And once again, federal government's the last report. So that's great news to hear. So we'll see from there.
Excellent. Good having you.
All right. Good night, gentlemen. You guys take care. Take care, everybody. Bye.
All right. Dace, before we get out of here, it would have been fun to keep tracker around for this one, but I do have, call it me taking a slight victory lap or doing confirmation bias. But we talked about it last week. I gave you guys a crazy prediction of 150K Bitcoin. These guys are saying before the end of the year. I did say October, so I'm still slightly out over my skis on that one. But I'm just saying, people are saying similar things.
What a difference a week makes, dog. I like it. You heard it here first. Let it be known. Let it be known. Mad props, man. No, it's worth noting, dude. It is. It's worth noting. And I think like I mentioned today again, the October history, right? That tells the tale in terms of why it's a good bet in my mind. We'll see what happens.
Agreed. And by the way, we do have that right here for you. So, ladies and gentlemen, this is the
man.
Bitcoin monthly performance by CoinGlass. You might notice that October column, that looks pretty darn strong. We go down all the way down to 2013. We have been in double
because
digits
we're covering it so
solidly.
much.
Yeah. October in particular is a double digit plus month historically. And even when it's not, that's in like 2022 bear market year, 2018 bear market year down 3%, and then 2014 bear market year down 12%. So overall, do we have high expectations for October? Yes. Can you get lost in this chart though? I would say also yes. And I think we see a good example of that, by the way, with the September data that we had. So if you remember, where did our 60-day cycle start? It started September 1st. So are we surprised that if you have a low on the first of the month, that the end of the month is going to be naturally higher if that is your cycle low? The answer is yes. So did we get an exceptional September just due to the way the dates lined up? Yeah, we did. Does that mean that October is going to follow suit? Good chance, not necessarily, but good chance, I'd argue. And the month to month doesn't tell the entire story. So let's not get too hung up on it. But the overall sentiment, I think right now, the overall sentiment everywhere is we're going up. Whether you look at the, if you want to look at the charts, we are currently sitting in the overbought area. We're continuing to go deeper into that zone, meaning more price appreciation. And if we can spend an extended amount of time in that zone on RSI above 70, that's where we can see some really good price appreciation happen. Right now, next targets we're looking at 134,000 pretty much. And then after that, then we're looking at pretty much low 150s, like 152, 154. Those are some of the next zones that we've got based off of the Fibonacci trend extensions we've looked at in the past. On top of that, the Fear and Greed Index, we're only at 70 right now. We can definitely go higher, and we've seen that historically, that is what has happened as well. Additionally, market cap, if you want to pull the Fibonacci extensions on the market cap, we are not even close to some of those targets yet. I want to say we were looking at like 6 trillion, and then the next one was 9 trillion, and we're currently sitting at 4.2 or 4.3. So yeah, there's room to go in all these directions. Haven't even had an altcoin season yet. There is a little bit of chatter that I've been looking at about whether or not we're truly going to get an altcoin season. I think the answer is like, yes, there is an altcoin season. That's just how the market flow works. So I think it's possible. But outside of that, man, is there any reason why we wouldn't say directions are pointing up right now?
Well, I mean, no, I would say no with the caveat of like there's always a black swan. Like you can always armed conflict.
That's true.
That's always a biggie that like can and even sometimes will cause V reversals, right? If it's time for the market to go up, that can happen too. But yeah, I think that's always something to bear in mind is like the conflict of things. Markets price in the future. That's what they do as a mechanism, right? And so it's interesting right now if you look at the markets as a whole, the fact that the Russell 2000 has broken out to all-time highs, and the business cycle numbers are at 49.5, so about to cross that threshold, hopefully into positive in the coming months. And we have a government shutdown, which can only go up, right? They can only turn the government on. They can't shut it more down. I guess technically they can. Man, knock on wood. I hate saying that. But yeah, I think it's curious because while gold at all-time highs would signal indecision, right, on a like macro level in terms of unrest politically, if you look at the gold BTC chart historically, every time gold spikes and the world doesn't end, all the risk stuff runs after. And so yeah, let's see where gold tops out and what happens after. And like you said, until then, I think until then, alt season is ambitious, and I know that flies in the face of the 4-year cyclers. And like now is the time that the 4-year people are being tested. How much do you believe in the idea of the 4-year cycle versus how much are you interested in assessing the market as it is, and taking what the market gives you? I know Blockchain Backer, which is a big name, recently publicly sold 50% of his whole position. And he was known as a bit of a contrarian player. And so, a lot of people were surprised about that. And I think he literally just said, I'm just playing my risk and playing the 4-year cycle timing. And like, hey, stick to your guns, stick to what you believe in, but, and like have a plan, of course, always. But yeah, if you ask me, man, we couldn't have more bullish sentiments right now to play off of. And have a reason to bend those rules, which are supposed to be guidelines and not sort of rote line. At least for me, my strategy, right? I'm not interested in selling in this market right now.
Fair enough. But yeah, you have a very good point there, which is I mentioned it early. Look, the conditions have been met for systems that were previously built without all the data between now and when they were initially built. We've hit an all-time high. We are officially in the 4-year cycle zone. Now, like you said, it's not just testing people, but it's testing the actual theory itself. So obviously time is going to be the only thing that tells what ends up being true or not true. But as it stands, yeah, the indicators are starting to show. None of the other top indicators are even remotely close to indicating a top. But as far as the time cycle goes, yes, that one, we are officially into that target zone. So definitely something to keep an eye on. And by the way, if you want to keep an eye on that stuff and all more that we have going on here, you can join us over in our private Telegram by heading over to walktheblockndf.com, hit our membership tab, and then from there, you can find our link to join in there, and we'll get you in there as soon as we can so you can catch all the exclusive live streams and information that we put in there. By the way, we did a special stream on Thursday for taking profits on YouTube, but we also double tapped it, and we continued it inside of the Telegram where we gave even more information, and we actually broke down some of those top indicators, what they do well, what they don't do well, how to apply them, and when to kind of ignore them, or if they're even getting too old for the markets. That's all kind of the stuff you can find over in our Telegram, along with just more access to us and all of our good folks over there. We appreciate you guys so much for joining. But yes, like we like to say around here, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A, go from beginner to intermediate to expert with us. And we would love to have you over there. Alrighty, Dace, before we get out of here, any final thoughts on where we're sitting right now?
I mean, it's an exciting time. You know, it is a period of time. If you're playing, if you're all in BTC, you're probably feeling like you're in a tough spot in terms of, do I keep going, do I not? If you're playing Ethereum and other alts, this is a moment in time that you've been waiting on, and so it's a unique time. It's a time a lot of people are rotating. You know, we've got all-time highs for gold and the S&P 500 and Bitcoin, and lots of other, you know, risk-on sentiment sort of building. And so it's an exciting time, and it's a time to stay involved for sure.
I agree. Look, we've been talking about it for years at this point, about building the system so that when the time comes, you feel good about the system and you just execute. Guess what? The time is potentially here. Now you get that real-time gut check of whether or not you pull the trigger on the thing that you said you were going to do. So
if they need help developing their plans, Zenith, where can they find us?
They can find us over at Walk the Block NDF on all of our socials, X and Instagram, or you can go over to the website, walktheblockndf.com. But outside of that, you can just keep doing all the free stuff by hanging out here with us on Monday nights, 8 p.m. Eastern time. Apologies for the delay today. Traffic got to all of us a little bit. But yep, that's where we're at every Monday night. We're going to be breaking down what's going on with the markets and why it matters to the current situation so we can get everybody included, whether you're just learning or you're very seasoned. We want to be making sure that we're getting good information for all parties out there. But, you know, outside of that, if you want to follow either of us specifically, Dace, I believe they can find you best in Telegram.
That's right.
Any social media, sir?
At Dace Northfall in Telegram, Instagram, and on X.
There you go. You can find me on X and Instagram at ZenithDI, but you can also catch us over at DGen Roundtable every once in a while where we do stuff over there. But yeah, outside of that, that is pretty much it. Folks, we will continue to watch the government shutdown and try not to act too happy about the politicians having to actually do their job for once and get something done. And outside of that, yes, we will always continue to be watching the crypto markets because, yeah, the exciting times are here. Let's see what happens. Well, till we catch you guys next time, I hope that all of you have an excellent week and continue to make excellent decisions and just enjoy yourself. So with that being said, ladies and gentlemen, thank you so much for joining us. Good night.